Welcome to Frema Audiobooks, where strategy, discipline, and precision converge to transform ordinary routines into extraordinary results. Today, we present Trader Daily Routine Discipline, Focus and Market Success, an audiobook designed to guide you through the structured practices, mental habits, and strategic routines that professional traders use to maximize performance, maintain focus, and achieve consistent results. In the dynamic world of financial markets, this audiobook is not simply about following a checklist or mimicking someone else's schedule. It is about understanding the underlying principles of discipline, preparation, and mental clarity that allow traders to execute decisions with confidence, reduce emotional bias, and respond effectively under pressure. Over the course of this audiobook, you will explore the essential components of a successful trading routine, including market preparation, analysis, risk management, psychological discipline, and post-market reflection, while learning how to cultivate focus, resilience, and adaptive thinking to sustain long-term success. You will gain actionable strategies to structure your day for peak performance, maintain clarity amidst volatility, and embed habits that foster disciplined decision-making, allowing your actions to be guided by strategy rather than impulse. By internalizing these principles, listeners are equipped to build routines that enhance performance, reduce errors, and create predictable, repeatable pathways to market success. If this audiobook inspires you to refine your trading habits, enhance focus, or strengthen mental discipline, follow Frema Audiobooks, subscribe for more actionable insights, leave a review to support our mission, and share this audiobook with anyone seeking to elevate their trading performance and professional mindset. Now, prepare to enter the structured world of a successful trader, where discipline, preparation, and clarity transform daily routines into consistent, high-performing results. This audiobook is divided into 8 chapters, each designed to guide you from understanding the psychology and discipline behind successful trading to practical daily routines, preparation strategies, and mental habits that support long-term consistency and performance. As we begin with the first chapter, remember that market success is rarely accidental. It is the product of consistent structure, disciplined routines, and a mindset trained to respond strategically under pressure. Chapter 1. Morning Preparation. Setting the tone for market success. In this chapter, titled Morning Preparation, Setting the Tone for Market Success, we explore how the first moments of a trader's day establish the mental framework, focus, and discipline necessary to navigate complex financial markets effectively, while examining why preparation, routine, and deliberate intention in the morning are foundational for long-term trading success. The morning routine begins with mental and physical alignment, because the state in which you start the day directly influences focus, decision-making, clarity, and emotional resilience in high-pressure trading environments where split-second choices can carry significant consequences. A structured start includes reviewing key market news, analyzing overnight developments, and mentally rehearsing the trading day's objectives, which ensures that your attention is strategically directed toward actionable intelligence rather than reactive responses to volatility. The narrator emphasizes that discipline and preparation is as critical as the analysis itself, because skipping foundational routines often leads to impulsive trades, emotional decision-making, or missed opportunities, undermining both consistency and long-term performance. Cultivating the habit of preparation, checking economic calendars, evaluating sector performance, and noting relevant news events creates a mental map that reduces cognitive overload during trading and allows for deliberate, evidence-based decisions rather than reactive impulses. One of the most significant lessons from this chapter is that trading is as much about mindset as it is about strategy, and that a disciplined, focused morning routine sets the psychological tone for the day, improving patience, attention, and confidence while mitigating anxiety, distraction, and reactive behaviors. Mental preparation often includes visualization of potential market scenarios, acknowledgement of emotional triggers, and rehearsing appropriate responses to volatility, which strengthens emotional control and supports strategic execution when rapid decisions are required. Another key insight lies in physical readiness, because adequate sleep, hydration, nutrition, and light exercise prime both mind and body for peak performance, enabling traders to sustain focus, process information efficiently, and maintain resilience through periods of market stress. The mind and body operate as an integrated system. Neglecting physical well-being can exacerbate stress responses, reduce clarity. Another key insight lies in physical readiness, because adequate sleep, hydration, nutrition, and light exercise prime both mind and body for peak performance, enabling traders to sustain focus, process information efficiently, and maintain resilience through periods of market stress. The mind and body operate as an integrated system. Neglecting physical well-being can exacerbate stress responses, reduce clarity, and impair judgment under pressure, highlighting the importance of holistic preparation. The importance of this chapter lies in demonstrating that successful trading begins before the market opens. As morning preparation, mental rehearsal and disciplined habits establish a foundation that maximizes performance, reduces mistakes, and creates predictability in an inherently uncertain environment. Review of previous day trades, reflection on successes and mistakes, and identification of patterns also provide insight into personal decision-making tendencies, helping to refine strategy and improve consistency over time. By internalizing these practices, listeners gain the ability to enter each trading session with intentionality, focus, and resilience, transforming the uncertainty of the market into an environment where deliberate decisions outweigh reactive impulses, and strategy guides every action. Establishing these routines not only enhances immediate trading performance but also compounds over time, as consistent application of preparation habits builds both skill and confidence. As traders implement these routines, they begin to notice a heightened sense of control over their responses, an improved ability to assess risk calmly, and a reduction in emotional volatility, creating a psychological advantage that supports both short-term execution and long-term growth. These benefits highlight that preparation is not a passive task but an active investment in mental clarity, strategic alignment, and sustainable performance, directly impacting trading outcomes and personal resilience. Ultimately, mastering the morning preparation phase equips traders with a structured, intentional start to each day, allowing them to navigate volatility with composure, maintain focus under pressure, and establish the discipline necessary to achieve consistent market success. Chapter 2: Market Analysis, Strategic Observation and Planning for the Trading Day. In this chapter, titled Market Analysis, Strategic Observation and Planning for the Trading Day, we explore how disciplined evaluation of market data, trends, and indicators establishes the foundation for informed trading decisions, while emphasizing the importance of structured analysis, strategic planning, and mental clarity for both risk management and opportunity identification. Market analysis begins with a comprehensive review of overnight price movements, news events, earnings reports, and geopolitical developments, because understanding how external factors influence market sentiment allows traders to anticipate volatility, identify potential entry and exit points, and align actions with objective data rather than emotion or speculation. By systematically scanning charts, examining sector trends, and monitoring key indices, traders create a mental framework that guides decision-making throughout the day, ensuring that each move is strategic and informed rather than reactive. The narrator emphasizes that consistency in analysis is critical because habitual evaluation reinforces pattern recognition, strengthens intuition built on evidence, and reduces the likelihood of impulsive actions that can erode capital and confidence. Traders who skip or rush through analysis risk entering positions based on incomplete information, emotional bias, or misinterpretation of market signals, highlighting why thorough, methodical routines are a non-negotiable aspect of professional practice. One of the most significant lessons from this chapter is that effective market analysis is iterative rather than static, meaning that reviewing historical data, assessing current trends, and projecting potential outcomes must occur daily to adapt strategies to shifting conditions, anticipate risk, and seize opportunities. Additionally, strategy development involves defining clear rules for trade entry, risk allocation, position sizing, and exit points, ensuring that decisions are repeatable, measurable, and consistent, rather than ad hoc responses to fleeting market impulses. Another key insight lies in the integration of technical and fundamental analysis, because combining quantitative data with qualitative context allows traders to see both short-term patterns and long-term trends, enhancing predictive accuracy, strategic positioning, and decision confidence. This dual approach ensures that trading decisions are grounded in comprehensive evaluation rather than isolated observations, reducing vulnerability to emotional bias or overreaction during volatile periods. The importance of this chapter lies in demonstrating that disciplined analysis transforms market observation into actionable intelligence, and that structured routines enable traders to act deliberately, manage risk effectively, and maintain focus on high-probability opportunities throughout the trading day. By establishing consistent habits of reviewing charts, reading news, and applying strategy rules, traders reinforce their mental models, sharpen attention, and cultivate the patience required to wait for setups that align with predefined criteria. By internalizing these principles, listeners gain the ability to approach each trading session with clarity, purpose, and confidence, knowing that decisions are based on disciplined analysis rather than guesswork or emotional reaction. Structured market evaluation also builds adaptability, because traders learn to adjust strategies in real time as conditions change, maintaining composure and strategic alignment even during unexpected volatility or market surprises. Implementing rigorous analysis routines reinforces mental discipline, reduces stress during fast-moving markets, and strengthens the trader's ability to prioritize opportunities objectively, ensuring that actions are deliberate, controlled, and aligned with long-term success rather than impulsive or emotionally driven. This approach allows consistent application of strategy, measured assessment of risk, and sustained focus, all of which are critical for reliable performance over time. Mastering disciplined market analysis equips traders to make informed, rational decisions throughout the day, anticipate challenges proactively, and maintain mental clarity in the face of uncertainty, creating a foundation for both immediate execution and long-term success in the dynamic world of trading. Chapter 3. Trade Execution, Discipline and Focus During Market Activity. In this chapter, titled Trade Execution, Discipline and Focus During Market Activity, we explore how traders translate preparation and analysis into precise, controlled actions during live trading, while emphasizing the importance of focus, discipline, and adherence to strategy in managing both risk and opportunity in real-time market conditions. Trade execution begins with clear predefined rules because knowing exactly under what conditions to enter or exit a position eliminates hesitation, reduces emotional interference, and ensures that decisions are guided by logic rather than impulse. By maintaining strict adherence to entry criteria, stop-loss limits, and position sizing, traders avoid the common pitfalls of overtrading, revenge trading, or chasing losses, which are often driven by heightened emotion or short-term reactions to market volatility. This discipline transforms strategy into action, allowing traders to implement plans systematically, rather than responding to the chaotic noise of the market environment. The narrator emphasizes that focus is paramount during execution, because the rapid pace of price movements, news events, and fluctuating market sentiment can easily distract or overwhelm the unprepared trader. Maintaining attention on key indicators, monitoring risk exposure, and tracking multiple positions simultaneously requires both mental stamina and structured workflow, ensuring that decisions remain deliberate, precise, and aligned with previously established strategy. Traders often employ tools such as checklists, trade journals, and automated alerts to maintain focus and reduce cognitive load, reinforcing the ability to act consistently under pressure without succumbing to distraction or emotion. One of the most significant lessons from this chapter is that execution is where preparation meets reality, and that the most carefully constructed strategies fail if they are not implemented with discipline and clarity. Every action must be measured, deliberate, and in accordance with predefined parameters, because the consequences of impulsive decisions are immediate, measurable, and often difficult to reverse. Precision in execution is not merely about technical skill. It is a mental discipline that develops through repetition, self-awareness, and continuous reflection on past performance. Another key insight lies in managing emotional responses during execution, because even experienced traders encounter moments of stress, uncertainty, or fear. Techniques such as controlled breathing, micropauses between trades, and deliberate mental checks allow the trader to observe physiological and emotional reactions without being dominated by them. By separating emotional response from strategic action, traders preserve clarity and avoid making decisions driven by frustration, excitement, or anxiety, ensuring that every trade reflects deliberate analysis and risk assessment. The importance of this chapter lies in demonstrating that consistent, disciplined execution is the linchpin of trading success, translating preparation, strategy, and analysis into measurable performance. Mistakes during execution are often magnified because of the immediacy of market feedback, so cultivating habits that reinforce precision, patience, and mental clarity is essential for minimizing errors and maintaining confidence. Daily practice of execution routines, combined with adherence to strategy rules, reinforces neural pathways associated with controlled behavior, enhancing automaticity and reducing susceptibility to reactive impulses. By internalizing these principles, listeners gain the capacity to maintain composure, execute trades accurately, and respond to evolving market conditions without succumbing to pressure, distraction, or emotional volatility. The consistent application of these routines strengthens both technical performance and psychological resilience, ensuring that the trader can navigate periods of volatility and uncertainty while maintaining strategic alignment and risk discipline. Trade execution also illustrates the importance of reflection and real-time assessment, because observing market reactions, evaluating the effectiveness of actions, and adjusting minor components without deviating from core strategy allows for continual refinement and learning. This ongoing feedback loop reinforces focus, enhances judgment, and ensures that trading becomes a disciplined, repeatable process rather than a series of reactive impulses. Mastering trade execution equips traders to implement strategy consistently, maintain high levels of focus under pressure, and reinforce mental discipline that supports long-term success, demonstrating that disciplined, precise action is the bridge between preparation and tangible results in the market. Chapter 4. Risk Management, Emotional Discipline and Stability in Volatile Markets. In this chapter titled Risk Management, Emotional Discipline and Stability in Volatile Markets, we explore how traders combine strategic risk assessment, disciplined position sizing, and emotional control to navigate uncertainty, while emphasizing why maintaining composure under fluctuating market conditions is essential for long-term success and consistent performance. Risk management begins with defining limits and boundaries, because every market move carries uncertainty. And understanding potential loss before committing capital allows traders to operate with confidence, maintain emotional balance, and prevent decisions driven by panic or overexcitement. Position sizing, stop-loss levels, and maximum exposure thresholds are tools that not only protect capital but also regulate emotional responses, ensuring that the stakes of any single trade do not overwhelm judgment or disrupt focus. By implementing clear rules for risk, traders reduce the likelihood of impulsive reactions during volatile periods, creating stability in decision-making even when market conditions are unpredictable. The narrator emphasizes that emotional discipline is inseparable from technical risk management, because fear and greed are powerful motivators that can distort perception, encourage overtrading, and lead to decisions that violate predefined risk parameters. Training the mind to observe reactions to gains and losses without succumbing to extreme emotion allows traders to maintain consistency, avoid unnecessary exposure, and execute strategy with precision even when market swings are dramatic. Emotional control also mitigates the psychological impact of unexpected events, reducing stress, preserving mental energy, and enabling thoughtful, strategic responses rather than reactive moves fueled by anxiety or excitement. One of the most significant lessons from this chapter is that the best risk management strategies fail if the trader lacks the mental discipline to follow them consistently. Rules for stop losses, scaling positions, or diversifying trades are only effective when executed without deviation, regardless of market emotion or external pressure. Developing the habit of adhering to risk protocols strengthens neural pathways associated with patience, judgment, and self-control, ensuring that consistent decision-making becomes automatic over time. Another key insight lies in preparation for volatility, because understanding historical patterns, market behavior, and typical stress points allows traders to anticipate challenges, calibrate responses, and maintain composure during periods of rapid fluctuation. Techniques such as pre-market scenario planning, mental rehearsals for adverse movements, and setting clear, actionable contingencies create a buffer against emotional hijacking, allowing traders to respond strategically rather than reactively. The importance of this chapter lies in demonstrating that managing risk is as much a psychological exercise as a technical one, and that combining objective limits with emotional regulation ensures both capital protection and sustainable performance. Traders who neglect emotional discipline often violate risk parameters, chase losses, or abandon strategy during volatility, highlighting that resilience, patience, and self-awareness are essential components of effective risk management. By internalizing these principles, listeners gain the capacity to maintain equilibrium during gains and losses, evaluate exposure objectively, and execute trades without allowing emotional impulses to override strategy. Over time, this consistent application of risk and emotional discipline cultivates confidence, reduces stress, and enhances the ability to remain calm and focused in high-pressure market conditions, creating a reliable foundation for performance. Risk management also reinforces learning from outcomes because observing how positions perform under various conditions, reflecting on emotional reactions, and adjusting risk frameworks accordingly allows traders to refine both technical and psychological aspects of their approach. This iterative process ensures that each trading session contributes to cumulative improvement in strategy, composure, and resilience. Mastering risk management equips traders to navigate market volatility with confidence, maintain emotional stability in dynamic conditions, and implement strategy without compromise, proving that the combination of disciplined rules and emotional control is the cornerstone of long-term market success. Chapter 5, Post-Market Review, Reflection and Continuous Improvement. In this chapter titled Post-Market Review, Reflection and Continuous Improvement, we explore the critical practice of evaluating each trading session, analyzing outcomes, and reinforcing lessons learned, while emphasizing why disciplined reflection is essential for growth, consistency, and long-term success in the markets. Post-market review begins with systematically documenting all trades, including entry and exit points, rationale, outcomes, and emotional state during execution, because without accurate records, patterns of success and error remain hidden, and valuable lessons are lost in the moment. This process encourages traders to observe recurring tendencies, identify mistakes, and understand how decisions aligned or failed to align with their predefined strategy, revealing both technical and psychological areas that require refinement. Consistent review turns experience into actionable insight, ensuring that each session contributes to cumulative improvement rather than being treated as an isolated event. The narrator emphasizes that reflection is not only about analyzing outcomes but also understanding process adherence, because discipline in following strategy, risk management, protocols, and decision frameworks is often the differentiator between consistent performers and those who achieve inconsistent results. Recognizing when deviations from routine or impulsive decisions influenced results strengthens awareness, reinforces accountability, and highlights opportunities to fortify mental resilience against future reactive tendencies. By systematically reviewing behavior as well as performance, traders gain a holistic understanding of both technical and psychological factors driving success or failure. One of the most significant lessons from this chapter is that trading is iterative, and continuous improvement relies on honest, detailed reflection rather than superficial evaluation. Each session presents new data, market conditions, and personal reactions that can be analyzed to enhance future strategy and emotional control. Over time, post-market reviews build a feedback loop that refines both skills and mindset, gradually transforming habits, reinforcing discipline, and strengthening decision-making under pressure. Another key insight lies in the evaluation of emotional responses, because understanding how stress, fear, greed, or excitement influence decisions allows traders to identify triggers, anticipate future challenges, and implement coping strategies proactively. Journaling thoughts, noting physiological reactions, and rating levels of focus or emotional intensity during key trades provide the data necessary to track progress in both skill and mental strength, creating a clear picture of how discipline interacts with execution. The importance of this chapter lies in demonstrating that the market does not provide feedback in isolation, and that deliberate reflection is necessary to extract meaning from experience. Without intentional review, mistakes are repeated, insights are overlooked, and psychological vulnerabilities persist, undermining long-term performance. Post-market analysis integrates technical skill with mental resilience, ensuring that both are cultivated systematically. By internalizing these practices, listeners gain the ability to turn every trading day into a learning opportunity, capturing lessons from wins and losses alike, and reinforcing behaviors that support consistent, disciplined, and strategic performance. Over weeks and months, this disciplined reflection strengthens decision-making, enhances emotional control, and creates the foundation for a sustainable trading career. Post-market review also encourages strategic adaptation, because observing market trends, refining risk management, and adjusting entry or exit strategies based on cumulative data allows traders to respond proactively rather than reactively, aligning actions with evolving conditions while preserving mental clarity. This iterative approach ensures that performance improves continuously and that both technical and psychological capabilities evolve in tandem. Finally, integrating post-market review into the daily routine transforms learning into a habit, creating a structured framework in which reflection, insight, and adaptation become natural extensions of disciplined trading behavior, fostering mastery over both markets and self. Chapter 6: Sustaining Focus, Managing Fatigue, and Maintaining Performance. In this chapter, titled Sustaining Focus, Managing Fatigue and Maintaining Performance, we explore how traders maintain concentration, energy, and decision-making quality throughout long, high-intensity trading sessions, while examining strategies to manage mental fatigue, reduce distractions, and preserve clarity under the pressure of fast-moving markets. Sustaining focus begins with understanding the limitations of attention and cognitive energy, because the human brain is susceptible to fatigue, distraction, and decreased decision quality after prolonged periods of intense concentration. By recognizing these natural limits, traders can implement routines that pace effort, integrate restorative breaks, and optimize mental performance, ensuring that each decision remains deliberate and consistent throughout the day. Structured breaks, micro-pauses between trades, and brief periods of physical activity or deep breathing allow the mind to reset, reduce stress, and return to the task with renewed focus, preventing the erosion of discipline and strategic thinking during extended trading hours. The narrator emphasizes that managing distractions is equally important, because external interruptions, notifications, or environmental noise can degrade cognitive function and trigger reactive impulsive behavior. Traders who cultivate an environment optimized for attention, minimizing interruptions, arranging screens efficiently, and employing focus-enhancing techniques create conditions that support deliberate analysis and controlled execution. By training the mind to filter irrelevant stimuli, you preserve mental energy for high-priority tasks and maintain clarity even amidst market volatility. One of the most significant lessons from this chapter is that mental endurance is not purely innate but cultivated through deliberate habits, including sleep hygiene, nutrition, and exercise, which support sustained cognitive function. A trader who integrates restorative routines outside the market ensures that focus, alertness, and emotional regulation remain intact during critical decision-making moments, highlighting the interconnection between lifestyle, mental performance, and trading success. Another key insight lies in the application of micro-strategies to maintain attention, such as breaking complex analysis into smaller, manageable tasks, rotating focus between different market indicators, and employing visual or written checklists to reinforce mental clarity. These methods reduce cognitive overload, prevent errors, and allow the trader to maintain strategic oversight without succumbing to mental fatigue or reactive impulses. The importance of this chapter lies in demonstrating that high performance is not solely about knowledge or strategy, but also about the capacity to remain mentally sharp, emotionally stable, and attentive during extended periods of pressure. By actively managing fatigue, regulating focus, and implementing attention-sustaining strategies, traders maintain consistency in decision-making and maximize their ability to execute strategy effectively. By internalizing these techniques, listeners gain the tools to approach long trading sessions with discipline and composure, preserving clarity under stress, mitigating the influence of mental fatigue, and ensuring that every trade is informed, deliberate, and aligned with strategic objectives. Maintaining focus also reinforces confidence, reduces stress responses, and strengthens the neural pathways associated with disciplined decision-making, creating a positive feedback loop for sustained performance. Sustaining performance involves planning both mental and physical recovery between trading sessions, because the ability to execute strategy effectively is enhanced when the mind is rested, energy levels are balanced, and emotional resilience is replenished. Traders who integrate structured routines, restorative practices, and attentional strategies are better equipped to navigate volatile markets, adapt to evolving conditions, and make controlled decisions under pressure. Finally, mastering sustained focus equips traders to maintain consistency, prevent lapses in judgment, and preserve emotional equilibrium throughout the day, ensuring that discipline, strategy, and mental clarity remain intact from market open to close, and that performance is reliable, repeatable, and aligned with long-term trading success. Chapter 8. Long-term routine, integration, sustaining discipline and consistency. In this chapter, titled Long-Term Routine, Integration, Sustaining Discipline and Consistency, we explore how traders embed daily practices, mental strategies, and disciplined behaviors into long-term routines, creating a lifestyle that supports consistent performance, emotional stability, and continued growth in the dynamic environment of financial markets. Routine integration begins with recognizing that success is not achieved through isolated actions or sporadic effort, but through consistent application of structured habits, mental preparation, and reflective practices over time. By embedding market analysis, trade, execution, risk management, emotional regulation, and post-market review into a cohesive daily schedule, traders cultivate a predictable framework that reinforces focus, reduces cognitive load, and enhances the ability to perform under pressure. The deliberate repetition of these routines strengthens neural pathways associated with discipline, self-control, and strategic thinking, gradually making disciplined behavior automatic rather than effortful. The narrator emphasizes that sustaining discipline requires both structure and adaptability. Because markets are dynamic and unpredictable, long-term integration is not about rigid adherence to a static schedule, but about consistently applying principles in a flexible manner that responds to evolving conditions, ensuring that mental and physical performance remain optimized even when circumstances change. This approach allows traders to maintain consistency in execution while remaining resilient to external volatility, environmental distractions, or personal stresses. Long-term integration is not about rigid adherence to a static schedule, but about consistently applying principles in a flexible manner that responds to evolving conditions, ensuring that mental and physical performance remain optimized even when circumstances change. This approach allows traders to maintain consistency in execution while remaining resilient to external volatility, environmental distractions, or personal stresses. One of the most significant lessons from this chapter is that habitual discipline compounds over time, as daily practices reinforce skill, strengthen emotional resilience, and enhance cognitive focus. Each trading day contributes to cumulative improvement, turning preparation, execution, and reflection into an integrated, sustainable process that drives long-term success. The routine becomes a scaffold for both technical and psychological mastery, reducing errors, minimizing impulsive behavior, and providing the structure necessary to maintain performance across fluctuating market conditions. Another key insight lies in the reinforcement of mental clarity and self-awareness. Integrating mindfulness, journaling, and review into long-term routines helps traders track their cognitive and emotional responses, identify recurring patterns, and refine strategies for both execution, minimizing impulsive behavior, and providing the structure necessary to maintain performance across fluctuating market conditions. Another key insight lies in the reinforcement of mental clarity and self-awareness. Integrating mindfulness, journaling, and review into long-term routines helps traders track their cognitive and emotional responses, identify recurring patterns, and refine strategies for both execution and emotional regulation. This iterative process transforms experience into insight, making adaptation and improvement a natural, continuous component of daily practice. The importance of this chapter lies in demonstrating that consistent routines are the backbone of sustainable trading performance. By systematically applying preparation, analysis, execution, and reflection every day. Traders reduce variability in performance, strengthen confidence, and ensure that decisions remain deliberate rather than reactive. Over time, these habits cultivate a professional mindset that enhances focus, resilience, and strategic thinking, enabling traders to maintain high levels of performance while minimizing emotional disruption. By internalizing these practices, listeners gain the tools to create a daily structure that supports their personal strengths, mitigates weaknesses, and reinforces disciplined behavior. As a foundation for consistent success, integrating routines across physical preparation, cognitive strategies, and emotional management allows traders to operate from a state of control and clarity, ensuring that performance is not dependent on fleeting motivation, luck, or external circumstances. Long-term integration also fosters adaptability and proactive learning. As traders reflect on results, identify opportunities for refinement, and adjust routines based on evolving market conditions, their system becomes more resilient and efficient, transforming daily effort into sustainable, compounding success that aligns with both short-term objectives and long-term goals. Finally, embedding structured routines into daily life creates a framework in which discipline, focus, and emotional control are no longer situational skills but enduring habits, forming a foundation for continuous improvement, predictable performance, and reliable results. By cultivating a lifestyle centered on intentional routines and consistent practice, traders can navigate markets with confidence, maintain mental strength, and achieve sustained success over time.